Okay, so let's just get straight into it. I'm gonna go over my bias. We have enough people in here. Hello, everyone. So I did my weekly analysis, and I don't know. I'll explain what my weekly analysis was. Yeah, I wanted to see this get drawn into, but first I want to see us run up higher, tag into this, then push lower to run below this midnight open. That was my draw, especially going into today. That is what I was expecting. That's what I was waiting for. So you could see that, and I don't know what started. I wasn't even looking at the charts because when I'm in school, I have to have my laptop curved downwards where I cannot. I have to like lean down, slouch down my chair to even see it. So I don't really have much analysis at the time when I was looking at the charts, I thought that we tagged into it. So I was starting to look for shorts, like a little bit off of open. I was like, okay, we probably hit it. I'll probably look for shorts. That's where I started entering, and that's where I made my mistake of getting demolished right here. I tried going short because I was assuming we were gonna, what was it? How do I explain this properly? What was my expectations? I was just expecting lower for us to target out this. So, I mean, straight off the open, we ran up higher. We formed this high. And I'll explain what else we hit, because when you go on the hourly, I'm going to get rid of the macros to clear out my charts a bit. Yeah, it's gone. Okay, let's find where price is at. Right here. So, we have what I was looking for, our 1 hour Sibi, our 1 hour fair value gap, and this unicorn, which is marked out, I'm pretty sure on the 15-minute right here. This low, we tagged into it, and we ran out the target I had from the day before. And the logic behind that was I just want more manipulation before below this low, which is what we needed. Once we manipulate below this low, below our midnight open, that is where we can be expecting higher prices. So, I mean, longs here would have been justified. It's way better off what ICT was talking about in his most recent thing that I studied, his most recent 24 mentorship. You just have to sit back for the first, I guess, 30 minutes of market, and this doesn't apply to you, Andrew, but literally just watch price and make sure, or just watch how price reacts. Don't do anything, don't touch anything, even if the best setup forms, and just journal how you're feeling, what you're feeling, stuff like that. And basically, yeah, I think that's about it. We tap into this, we run lower, which you could see we respected this higher time frame breaker, which is also a unicorn, perfectly. You can see the body is respected. We barely go above it. The thing I had marked up from yesterday, 5 handles above it. We sold off lower, down into our target. If I was crazy enough to, what was it? Take shorts off of this, I probably would. If I traded like how I did before, there was no SMT on this, by the way, pretty sure. But if I was trading like how I used to before, I would most definitely short that, but I don't do that anymore. I have one goal in mind. It's to get a motorcycle. So that's what I'm waiting for. Otherwise, yeah, not really any SMT other than, I wouldn't even say that low or that high, so no SMT. But yeah, the only proper place we could have taken it was probably going to be off of this inversion fair value gap. Once we saw this be cleanly respected with a proper draw on liquidity, a target lower, and we ran that out, which we formed kind of 3 drives down here. I wouldn't really rely on that itself, but I'd be looking at time, we're going to 11, and I probably wouldn't trade leading into the lunch session. So I'll mark out the time where I more than likely would not have taken any trades. I don't even look at the charts during lunch. I only come back 5 minutes before, so this is the time where I'm not looking at price. But you can see we had this high that we left. We drew to it perfectly, and I don't still have the fair value gap marked up, but we have still more of the fair value gap to target out. But I don't really see any type of internal entry other than, of course, this inversion down here. What we would need to actually take this trade, it's not going to be a 1 minute. I don't trust these 1 minute inversions. I'd have to have something like a 5 minute inversion. So we have this 5 minute inverse fair value gap right here. Barely one, but it does count. And once we close above, that is good enough for you to take a short. So where you would be up here, which that's not really optimal, but I mean, you wouldn't have that much drawdown. It's like 6 to 8 handles of drawdown. Once you enter up the close above, you enter, it probably runs a little bit lower. That's only 6, you can handle 6 handles of drawdown. Literally put your stop loss to 12 handles or below the gap and you'll be fine. That's only 12 handles. You could handle that if you're trading. Let's see if there's any type of SMT at the lows to validate that type of long. Okay, we'll see real quick. 8, that was at 11, right? Did we have any SMT? Not really any SMT, so more than likely, unless we had a 1 minute SMT, which is where, this is where we get really refined down. I don't really like going this low. Yeah, I don't really like going this low typically, but if there was a 1 minute SMT, heat of the moment, most people would be able to take that. So, I mean, I'm not seeing any type of SMT down here. So, more than likely, I probably wouldn't have taken the trade just off of that. I would have journaled watch price. Some people, I think, I don't know who would have taken that. I didn't see anyone would take that. But pretty sure that this is a good place to long. Most definitely, I don't think anyone would have caught the full move. They would have taken partials at discount, which is fair. But you can use the macros on the 5 minute when we're running up higher. You can see expansion, 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 then the run above the high, manipulation. And I think this is good enough when we have manipulation here. It tells us, what do we use when there's manipulation? You want to use standard deviations. And the standard deviations gave us a pretty accurate target of where we could be targeting lower. The fourth standard deviation, our final target, right here. That's where we usually target up. And I only saw one type of entry for here. I'm going to go over the multiple types of entries for this because in my mind, or in the way I used to trade, this is a market maker sell model. Even though, I mean, you could call this expansions, I guess. We still need the repricing underneath original accumulation, which we don't really have much of that. There's some more stuff I need to talk about regarding market maker models. I'll drop it in a different section. But we run above this high. We form kind of internal highs right here that we just keep running out. Run out at these. All these liquidity gets ran out. Then we fail to run out this high. I wouldn't say this is a rejection block, but we're starting to become weaker. We're not really running out this high. We start to push lower. I don't want to call this a shift in market structure. According to ICT though, this should be the lowest short, or this is the lowest short. Considering this is the BPR, we chop above it, we have this high that's placed over here, we run out the high. Best place to short is inside of this BPR after running out this high. Instantly dump lower, and this is our low risk short. High to low standard deviation. I want to see if we retrace into OTE of this range, which we did right here. So OTE for value gap, that would be the next place to target out, which I don't like taking a trade if I'm looking for OTE PD array unless it's inside of it and I take it off the 6-2. That's how I usually define my plays. And this lower here is a mitigation block. Even though we tagged into and ran up higher, I'd still use it and trust it because you can see tapped into it a few times. Overall, 6-2, OTE, everything looks good for a short here for market maker sell model, which is very good. So this is more than likely where I would have taken my short after seeing all this stuff align, displacement lower, and manipulation higher, run up this high. Everything for me, I'm expecting lower, especially with the manipulation macro. All this just ties into a perfect trade, which if you look at my older recaps, I take setups like this almost all the time. But back then, I used to take them down to 4 standard deviations, and that was the way I made, I think, 10K in a month in October. So hopefully those conditions can reset, but usually I just throw my stop loss above this right here. So I'd say 12 handle stop above 7.9 of OTE. Target for standard deviation, which is insane. I more than likely won't do this because I'm supposed to be a low-hanging fruit trader now. So 73 handles, which is almost, with one EQ contract, $1,500. That would be good enough for me. I would have taken that. If I was really scarce, I'd probably take a trade down to this low, but that's still a little bit too crazy for me. And anything below, let's see this. Anything below here, the discount, I want to start taking positions off. So more than likely. Okay, let me go over one more thing real quick. Is that my IP? I want to search it up. I'm going to keep it on the side to see if that's actually me. Because I use a VPN in school. So 126. I'll search up that. I'll geolocate that later. But the one thing I want to go over, when using standard deviations, this is kind of sus, but when using standard deviations, you do not want to target the ones in the premium. You only want to target the one in discount. So for example, if we had a high and low right here, you want to target this one. If we had a high and low here, you want to target this one. So whichever one is inside of the discount or premium of whatever you're targeting, you want to target that one out. So that's all I really have. After that, I more than likely hop off the charts. I wouldn't be too ecstatic about taking anything else. And this high would most definitely be a target again because we still have our 1 hour Sibi that we still have to fully fill, which we did with this little run up higher. So I think that's all of the recap. Okay, I'm gonna go search up the IP, but let's see if we have any questions right now. YM for SMT as well. Oh darn it! I should have been looking at SMT or YM for SMP. Thank you, Fearing.
Somebody asked what's CISD.
Change it. I'll go over that in a second. I'm trying to see. Whoa, my computer's frozen. This is not good. Okay, I searched up the IP that showed up. This is like, come on. This sucks. My computer is being so slow right now. I froze. No way. Okay, here we go. So I live in New York. Dang. So if anyone thinks they can get me through my IP, I think I have. I live in New York, New Jersey, Arizona, Tucson, all of them combined. Okay, back onto the charts. Please. I don't know what's the problem right now. My thing is so slow. Okay, it's fixed. I just have to close out of it. Okay. Let's see. Okay, yeah, that was the only question actually. Change in state of delivery. The way I learned it was literally just a run of a high, and you want to use the order block that ran at the high. So this isn't really a good example, but this is where I want to see change in state of delivery. So just pretend we run up this high, this up close candle when we run up the high. We have this thing that I'd be using as an order block. I saw this, I didn't want to talk about it though, because we tagged into it. We usually don't want to see mean threshold of this line right here. We want to see the middle of it stay respected. But usually we close below, we start running a little bit lower, we retrace into it, and bodies are respecting it. Wicks don't touch consequent encroachment, which you can. But overall, I want to see the bodies respect the order block, this line of the order block. So pretend this never happened, but we tag into it, we shoot lower from that. That's change in state of delivery. Some people like to use that as market structure shift. Not much of a good example here either. I would find a really good one. Okay, pretend we run out of high. We have these order blocks. We tag into it. We're respecting a ton. Entire order block is staying respected, which we want to use an entire up move. So we tag into this. Boom, boom, boom. Change the delivery lower. We're good to go short. Our bias is short. Bang. Short off the fair value gap. Target lows. That's all I really have. Is Fearing in this call, or is he watching my YouTube? Which one? I don't know. Getting good alerts though. I don't know how he has the time for that. Okay, 10 a.m. 4 hours of 3. Okay, let's go over this. Knowing the DMs. So, 10 a.m. 4 hour power of 3 forms SMT with a 6 a.m. 4 hour power of 3's lows with YM. So, to decode that, I have to use my brain a little bit. So, 10 a.m. 4 hour power of 3. Okay, so new opening forms SMT with 6 a.m. power of 3 lows with YM. So, maybe just the power of 3 before that, the candle. Okay. Let's see that. Oh, he's talking about today. Perfect. Okay, let's check that out. Fearing's example. I'm on YM now. Okay. Where's our 5 minute? Okay. 5 minute on here too. This is Friday. What am I looking for? 5 minute, 5 minute. I'm on the 5 minute for both. Okay. We'll see this. Something isn't right. Yeah, something most definitely isn't right. Okay, so this is a low. But what is this? This is it's fine. I guess you can call it. I guess this is SMT. Something doesn't feel right. This is a high, meanwhile this is a low. 10 a.m. 6 a.m. Oh, I see it. Okay, perfect. So we did have SMT. We pushed up higher. Потому что это те. Okay. I really don't have much else. Do you have any questions right now?
Hey, yo, Mantas, you got any tips and tricks about like funded account, since
Trade him kind of. No. How long have you been trading for?
like 5 months now,
Okay.
4 months on demo?
Yeah, you should probably try taking it a little bit slower if you're planning on buying one. My Funded Futures is doing pretty good deal on them. Or just try passing your evils on demo. That's the best plan. The way I pass them, I kind of size heavy and take like the highest quality trades. Try to make 1.5k in a trade. That's the way I try passing him. But how can I mean, taking it slow would be good. Treating it like it's an actual funded account. Maintaining your FOMO too, because you can't really instantly turn FOMO off. It's a skill that you acquire after more screen time. It's really hard to get rid of it, but once you're able to kill off your emotions slowly, you're right. I think you'd be ready for fundeds. Because just the main killer, just getting emotional and like losing a small amount of your profits and just crashing out over that. Like what I did today. Literally, oh, I gotta talk about my loss. Okay, I already talked about it. I thought we tapped into it. I couldn't see the charts. Decided to short. I took a loss. I was like, okay, we surely had to have hit it now. We probably hit it. Okay, I'm gonna go short. I, I was thinking, okay, this bearish value. Yeah, finally, we're gonna take it out. We have internal liquidity. I'm gonna short. Bang, got stopped out. I was like, okay, 3 drives. This has to be it. I'm gonna short. Bang! It's ridiculous. It was horrible. That's my fault. I'm trading when it's low quality. Very low quality. I gotta buy the subscription though. I'm gonna take care of it. What else? Do we have any other questions? Because I'm about to do what I'm expecting for tomorrow. Is that low resistance liquidity? Hello. Whack. Okay. Is that low resistance liquidity, Mythic? Or Drag Daggle? Yes, I hear you.
Mantas.
Yo, what's up?
Can you me? I understand low resistance liquidity as just unswept lows that are like stacked, kind of.
Yeah, yeah, yeah.
But I was watching. I started.
That is kind of crazy when they explain it. Trust me. It's like when we have a bunch of lows like this. I guess some unfilled or almost no gaps. I guess that's when we have boom low resistance liquidity like this.
Yeah, but on ICT, I was watching Core Content Month 1, and I just posted on the comment section on the live. He said those lows are considered high resistance liquidity, so that's why I was confused.
Month 1. What episode was that?
Episode 6. I posted on the comments just now.
I'm trying to find it on my own thing, my own journal. I don't think I have it. Month 1 to 2.
It's the liquidity runs video.
Okay, I completely skipped over that one. That's horrible. But yeah, just I think your thing on low resistance liquidity is right. Trust me on that. Don't worry about that.
So don't know what he said trip me up. Just stick to what I
trip you up. Okay, some stuff he says in core content is extremely hectic. I love the swing trade stuff he says too. It'll trip most people up. Just don't let it stress you out. I'm gonna go into my bias or what I'm expecting for tomorrow. I really want to see what we do at midnight. So in like 38 minutes. That's 38 minutes. 38 minutes. I want to see what we do. I want to see if we get a high accumulate around that. We have news. I want to be going crazy on Wednesday and Thursday. That's when I'm going to copy trade again. Right now, I'm going to fix that account separately. I'm going to take separate trades on them, especially because I'm not going to school tomorrow. I'm not going to. What was it? I'm not going to be held back. So, overall, let me brainstorm this real quick. Premium busy, bodies, weeks are still respecting you, bodies are respecting you. We can have a probable cause to go lower. We still have the new week opening gap we can draw into. And honestly, anything could happen. I'm really against going higher though. I really want to be bearish. I can't really give too much analysis without our midnight open and seeing a little bit more structure and price. The most I'll do is take our new day opening gap, see if we're above or below that, and use that to determine if we are in a higher time frame, premium or discount. So we'll use this. This is it, right? Okay, I got the. So we use the close and the open. This is really weird. We open. Okay, that's fine. Bang, tag into it lower. Bang, tag into it lower. So I mean, I think it's pretty safe to say this means we're on a discount though. Shoot. Hopefully lower. Unfilled breakaway gap as our new week opening gap. This lower portion. By the end of the week, I'm really hoping we could fill it. And that's really about it. I'll give expectations for tomorrow's recap, what I'm expecting for Wednesday and Thursday, and the rules we have to go about it trading days with CPI and PPI, but that's about it. Okay, do we have any other questions? I think that's about it for the stream, honestly.
Yo, Mantas. Yo, Mantas, do you think it's worth studying episode 3 of the 2022 mentorship like crazy? Like
2022.
Backtesting, yeah,
Bro,
2022
learn
episode
about all
3.
2022. That's so helpful. Go through the entire 2022 mentorship. It'll
I've
save
been
you,
st-
especially right
I-
now.
I've been studying episode 3 for like the last like backtesting it for like the last 3 days, 2 days,
Good.
collecting just data about like all of it. Do you think it's worth it if I keep going or I
Yes.
just move on to the next
I
episode?
mean, move on to the next episode once you've watched it twice. Because there's so much more value. What you're learning right now, it's like you're trying to make a puzzle. You have some of the pieces that might seem helpful, but you just have to keep adding them all together. He'll go more in depth about the stuff he teaches in episode 1 to 10, especially 11. Ignore the intermediate, higher time, or what was it? Short term, intermediate term, and long term swing highs and lows. That's just internal and external liquidity. I think that's
Mm-hmm.
episode 11 or 10. The rest of
Yeah.
it gets really good when you start watching episode 20, 30, especially 30 to 40, and the last episode. That's where the best stuff will happen. You'll see the absolute
Alright.
best episodes in that. But
Alright.
keep pushing forward, trust me. Don't get
Alright.
held up.
Alright, thank you.
Yo, Mantas, I have a question about prop firms, right? So, for example, if I sign up with my email, can I use my parents' like ID and stuff for it?
You can use your own email, phone number, and card. You just have to use your parents' name and info, ID, everything.
Yeah, because I'm thinking about if I get paid today, I'm thinking about buying one from my funded futures because
Just
they're
get
like
Mantas.
pretty cheap.
It's good.
Yeah, no, I do.
Okay.
Yeah, look, I'll even show you when I like, since I like,
So
what do you call it? What's the thing? When I go into Take Profit Trader, it always goes with code Mantis. Look,
really,
look. Can you see my stream?
thank you Evan, for showing up. Yes, I can. I really appreciate every single one in here for showing up. 18 people. We're gonna go even crazier for the recaps.